Hello, Maverick traders, and welcome out to your daily market roundup. This is Sankit there, and I'll be breaking down today's market price action. It's a Thursday, March the 6th, so let's get into it. As always, we'll be taking a look at broader market analysis, take a look at what's happening in the sector heat map analysis, take a look at the news, and then we'll talk about some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So jumping into the market analysis, let's just jump right into the headlines and the numbers. And today, again, one of the volatile days. So the intraday volatility continues, and we did see some progress today as far as the exemption goes for Canada and Mexico. That did lift the markets up a little bit, but again, we saw markets being more under pressure. We saw an orderly sell-off overnight. So when we opened up this morning, markets were already under pressure. We got some good news about this progress, and then we just didn't really go anywhere for the rest of the day. So markets again, another ugly day. You can see that the numbers are red across the board. Dow Jones down 1%, S&P 1.76. Is this the technology that's just leading that slide here, down 2.73%. Here we are with the small caps down 1.54%, oil down, gold down. So pretty much a red day across the board. Now, if you take a look at the advanced decline ratio, you can see that it was down 71% in the red, only 26% in the green, and again, plus minus 50 EMA. Again, we are now 66% in the red. So market sentiment, again, looks still pretty bearish. As you can see in the sector heat map here, pretty much in this technology sector is really where the bloodbath is. Outside of that, things are still okay, but all these big flyers, things that were doing really well in the last quarter, it's just getting killed over here. Now, as far as the chart goes, let's just take a look at where we are. S&P again, we are in this wide range, and you can see that these candlesticks are not the clearest candlesticks. A lot of upper shadows and the lower shadows, but just not really going anywhere. I think once we do break some key levels, that's where we can get a little bit more bearish. But right now, I think you have to be a little bit more mildly bearish and just be focusing on the underperformers and the outperformers. Now, in the tech sector, you can see that things have already broken down. So we're seeing more selling pressure in this technology sector. So that's really where the bloodbath is. Now, when we take a look at an outlook, anything changed? Not really. Going in with a very cautious outlook, especially as we go into tomorrow. We have the U.S. Jobs number that's supposed to come out. And again, a lot of focus is now on the economic data. We all know what's going on in the political world and the ramifications that will have across the board. Markets are really concerned. So I think this is where you need to be following that market sentiment. And market sentiment is very cautious here. Now, when we take a look at the trades, again, doing a balanced approach, looking at the outperformers and looking at the underperformers. So let's just start with the outperformer here. This is the first one, progressive. You can see that if you look at the chart, you realize, well, nothing is really going on. Everything is, pretty orderly, pretty bullish. You can see, those pullbacks or basis has been a good opportunity to kind of buy into here. So progressive goes at the top of the list here. Here's another one, Verizon. We broke out at the level and kind of holding it here. So I think I do like it a little bit more to the upside here. And then the third one here is Gilead. And you can see this thing is also looks more like that progressive chart here. It looks pretty orderly, pretty bullish here. Now, as far as the underperformer goes, I think one of the ones I covered last week is the RCL and the CCL. You can see this thing is, consumer sentiment is now, consumer confidence is down into the low numbers here. This is where people will be evaluating and sort of pushing some plans. So I think this is where we might see some hurt in these areas. You can see here CCL, basis moving lower, more volume coming in. So do like it on the further downside. Here's the last one. It's the service now. You can see this thing is just looking pretty bearish as well. And again, you can go down the list with all the tech sector here. Okay, there's a lot of good looking charts there. So the big question is, do we want to be, tilting your portfolio really bearish? You want to be a little bit more balanced because, things can bounce back. So I think that's really where we want to be. I will be turning a lot more bearish if we start to see some, key levels, because that's where, any bounce will be more likely a shorting opportunity. So until then, we'll probably have to kind of be on the mild bearish here, and then again look at the outperformer and the underperformer. Now, as far as the outlook goes for tomorrow, again, I think big focus is going to be on that employment report. Now, based on that number, market might freak out, or market might just have a big relief rally. I think it's going to be one way or the other. We'll find out tomorrow. Again, market volatility continue. No clear market trend. One thing we're noticing is that all the buying that's coming in, we're seeing some sell off on those any updates. We had a nice update yesterday, sold off. We had a big update last Friday, sold off. So it seems like that's when we see those rallies, those seems to be good shorting opportunities. So until anything changes, I think we should continue hunting more onto the downside. That's the game plan. Good luck. Again, this is a market that you want to be more patient and just navigate. This is a bit more unprecedented for a lot of traders, kind of dealing with not just the economic health of the economy, but you're looking at all the news, the tariffs, and all these things are big detractor from what's going on out there. So we'll find out tomorrow with the jobs number. And again, maybe we'll see more concern. And again, we'll get a little bit more clarity then. Thanks for joining. We'll see you in the next one. Happy trading.